Hello, property navigators. Snapping up the right assets in undervalued pockets of regional Victoria right now can let you lock in equity on day one. You're buying at a deep discount to replacement costs and to Melbourne level pricing in markets where supply is chronically tight, infrastructure spend is ramping up and population inflows are accelerating. Through rental growth, renewed buyer demand and the next upswing in the cycle, today's discount converts into tomorrow's capital growth, giving you a head start that leverage growth alone can't match. And that's what we're going to talk about today in this second and third part of our Property Investor's Guide to Regional Victoria. Now we're going to drill down into the only 10 local government areas officially classified as major regional cities in the whole of Victoria. These are the 10 key regional hubs outside of Melbourne. We'll analyse each using consistent and very relevant data points so you can easily contrast their investment profiles. Today in this part 2 video, we'll cover Geelong, Ballarat, Bendigo, Shepparton and Wodonga. In the next part 3 video, we'll cover off Warrnambool, Mildura, Horsham, Wangaratta and Latrobe City. Let's kick things off with the city of Greater Geelong, which is located about 75 kilometres southwest of the Melbourne CBD and has over 50 suburbs within its boundaries. It's by far the largest regional city in Victoria and is the second largest in the state, with the population nearing 300,000, projected to exceed 367,500 by 2036. That's 2.26% annual growth, making it one of Australia's fastest growing cities. In fact, the latest Regional Movers Index report shows the LGA had a 9.3% share of all migration to the regions, which is the highest in the country. Geelong is experiencing an infrastructure boom with over $16.2 billion worth of infrastructure projects. There's too many projects to list, so the top 20 highest costed are on screen. Projects that span everything from health, rail, energy to the new $450 million convention centre and even a $250 million motorsport precinct. 170 plus projects are spread across the greater LGA and are building the region out to essentially become an extension of metropolitan Melbourne in years to come. Geelong has its own port, the 6th largest in Australia by tonnage. It is also home to Avalon Airport and the Spirit of Tasmania ferry terminal. The median or typical house price is about $849,000. Certain popular suburbs have higher medians exceeding $1 million, but many family suburbs remain in the $600,000 to $800,000 range. Over the past 10 years, house prices have seen over 75% growth. In January 2020, typical prices were around $688,000, peaking at $960,000 just 28 months later in April of 2022. However, in the years since, prices have steadily declined, down 11.49% in the past 3 years and 3.28% in the past 12 months. But this is where it gets really interesting. In this first quarter of 2025, prices stabilised, dropping just 0.12%. And check this out, in May 2025, Greater Geelong's market had its first positive growth in 3 years. It was up 0.12% and up again in June, 0.13%. Now, it's not huge, but it's back in the green, which is great news for this market's cycle position. Geelong's vacancy rate remains low at around 2.3%, meaning rentals generally get filled up quickly as population growth keeps rental demand high. Investors can expect steady tenant interest, though not as frantically tight as some smaller regional cities. Gross rental yields are typically 3.07% for houses, reflecting higher property values, and median rents are rising, helped by population inflows and building approvals that have been trending downwards since 2021. Now, stock on market has also been trending downwards with a markedly strong drop from September 2024 onward, contributing to much lower inventory levels. Days on market have now dropped to 30 days. It hasn't consistently been this low since mid-2022, and vendor discounting has been rare throughout 2025 to date. Greater Geelong's housing market has moved from cooling to reheating after a 3-year slide. Taken together, falling inventory, quicker sales, resumed price growth, and nation-leading internal migration, the data points to increasing sales market pressure. Next, we have the city of Ballarat, which is 80 kilometres northwest of Melbourne. It's Victoria's largest inland city with over 121,000 residents, and it's projected to reach nearly 145,000 by 2036, a solid 1.9% increase per year. The city has 76 suburbs within its boundaries and hosts new greenfield estates on the urban fringe in Ballarat's west. Ballarat has several key infrastructure projects underway or planned, focusing on community facilities, sporting infrastructure and growth areas. The Ballarat-based hospital redevelopment, a $655 million project currently underway, is the largest infrastructure project in Ballarat's history. Rail links have also improved with the completed Ballarat rail line upgrade, resulting in more frequent trains to Melbourne. Another big one to mention is the Ballarat West Employment Zone, a new industrial precinct that's set to become the engine room for jobs and economic growth. It will be home to industrial, wholesale, logistics, construction, commercial and residential areas to create connected places where people can work and live. It will also be home to an intermodal freight hub, providing secure infrastructure and access to road, rail and seaports. The typical house price sits at $518,000, which is about 40% cheaper than Melbourne's median, making it a very attractive entry point for investors. Over the past 10 years, house prices have risen 77%. Growth was especially rapid from 2020 and peaked in July of 2022. We saw a nearly 43% increase in just those 29 months. Since, Ballarat's market downturned and constantly slid down 9.8% from its peak. 2025 has seen stabilisation as prices have remained almost unchanged, dropping just 0.17% from January to April. But check this, as of May 2025, the median price began climbing again after nearly 3 years of falling, albeit marginally at just 0.19%. But in June 2025, we also saw a 0.2% increase, a promising sign for this market's cycle position. The rental market is tight, with a vacancy rate of 2.23%, well below the 3% benchmark of a balanced market. Vacancy spiked at the end of 2024 as new housing stock onboarded, but has since come back down. Gross rental yields are at 4.11% for houses. Median rents are still rising and are up to 2.5% in the past year, which is expected to continue increasing yields over the short term. A rising yield position is strengthened by the fact building approvals have effectively fallen off a cliff from January 2025 onward. That is well below the previous 5 years. Stock on market is also very low by historical standards. May 2025, there was just 1 month of supply available. This has increased marginally to 1.2 months of supply in July 2025. Days on market are down to 42 days from 61 this time 1 year ago, and there's been pretty much no vendor discounting throughout 2025 to date. Ballarat looks to have bounced off its floor. Prices have stopped falling just as approvals, listings and days on market tighten, while rents keep climbing. The squeeze on stock and a vacancy rate well below balanced suggest modest capital growth ahead, with yields set to edge higher. Next up, we have the city of Greater Bendigo, which has about 126,000 residents and is forecasted to hit 150,000 by 2036. That's a 1.9% annual growth rate, making it one of regional Victoria's fastest growing areas. It's the fourth largest inland city in Australia and the fourth most populous city in Victoria, with over 60 suburbs, and it's only about 150 kilometres from Melbourne. Bendigo's economy has benefited from big-ticket infrastructure over the past decade. A world-class, brand-new $630 million hospital is now operating, with final project completion slated for 2026. Council adopted its 25-26 budget in June, which shows many more projects underway to support the region's growth. House price growth has performed well, increasing 85.88% in the past 10 years. Prices increased strongly from January 2020 onwards, rising from $389K before peaking at $582K in August 2022. Now that's 49.5% growth in just 32 months. The market then dropped from August 2022 until February 2024, coming down around 2.75%. Now by October 2024, the market had recovered, with the median house price returning to $582,000, where it was in the 2022 peak. Since, Bendigo has had growth of 3.25%, bringing its median price to $601,000 in July of 2025. Vacancy rates are extremely low at 1.34%. Yes, that's right, 1.34%. An extraordinarily tight market indicating virtually full occupancy of rentals. House rental yields are sitting at 4.11% and median rents are up over 5% in the past 12 months, driven by such low vacancy. Stock on market has been trending downward in historical terms, but the first 6 months of 2025 had the lowest levels ever in comparison to any other 6-month block period in the past 5 years. Alongside that, Bendigo is achieving 32 days on market, down from 55 days this time a year ago. Building approvals upticked just a tad this first half of 2025, but are still low given the vacancy rate. 2024 saw a surge in approvals, so we should start to see some of that stock entering the market. Not that it will make all that much impact, with vacancy remaining well below balance. Bendigo is back in growth mode. Prices have pushed past their 2022 peak, while stock and days on market hit multi-year lows. With vacancy stuck near 1% and rents rising faster than values, there's a mix of renewed capital growth momentum. Now let's run through the city of Greater Shepparton, which is located in the Goulburn Valley, about 180 kilometres from Melbourne. It's a smaller LGA with 33 suburbs that are home to around 71,000 people, projected to reach nearly 79,000 by 2036. Shepparton City and nearby Warrnambool account for about 75% of the LGA's population, and they will also absorb most future growth, notably in new estates on the city fringe. The LGA has seen several major projects completed over the years that have supported its position as a powerhouse of agriculture and innovation. The Shepparton Line upgrade is a $714 million project, enabling faster and more frequent services, vastly improving Shepparton's connectivity to Melbourne. Stage 3 is nearing completion, worth over $400 million. The government has also recently announced a $20 million Goulburn Valley Link freight and logistics precinct, capitalising on the LGA's location and connection to national and interstate transport links. Shepparton's housing remains highly affordable relative to larger cities, with its median house price around $528,000. Price growth has predominantly been in the past 5 years. In January 2020, the median house price was $320,000, which grew 62%, peaking at $520,000 in March of 2023. Compare that to the 5 years prior, 2015 to 2020, which saw 22% growth. Now, since peaking in 2023, the market stabilised, only dropping slightly here and there, and has now risen 1.7% to today's median value. Shepparton's median house price remains below the regional Victoria average, so if you buy the right property, there can be healthy levels of inbuilt equity attained when purchasing the right deal, of course. Vacancy rates are a very low 1.6%. In early to mid-2023, vacancy was around 1%, so essentially nothing available, and has since stayed mainly in the 1% range, only briefly hitting 2% for 4 months in early 2025 as new stock entered the market. The city faces a well-documented rental shortage that has driven rents upward. Recent years saw double-digit percentage rent increases for many properties, up over 28.5% in 3 years and over 51% in the past 5, resulting in yields being around the 4.56% and rising mark in the short term. So there's certainly pent-up market pressure here. Stock on market has also come down, resulting in just 1 month's worth of inventory, up from 0.8 of a month's worth of stock in May 2025. This has meant that realistically we haven't had any vendor discounting in 2025 to date. Days on market have tracked downwards for the last quarter of 2024 and in unison with inventory levels. The only graph that's trending upwards for this market is building approvals. They're at the third highest level we've seen since 2022, but still not enough for any sizable impact. Shepparton is shifting from cheap entry to tight squeeze. Prices have rebounded, yet remain below the regional average, giving buyers residual value with inbuilt equity when the right deals are purchased. With vacancy stuck near 1%, stock barely a month deep, and rents up 50% in the past 5 years while still climbing, even an upward tick in approvals won't hit the market fast enough, so expect market pressure to continue. Lastly, let's cover off the city of Wodonga, which is located around 320 kilometres from Melbourne on the Victoria-New South Wales border. Wodonga has a twin city called Albury. They literally sit alongside one another just on different sides of the border, hence why you'll typically see them grouped together or called Albury-Wodonga. But they are separate LGAs in different states. Wodonga had 14 suburbs with a current population of just over 46,500 and about 105,000 $53,000 when combined with its twin city Albury. It's forecasted to grow to $53,500 by 2036, a rate of around 1.5% per year. Large new residential communities in the south are underway and will absorb much of that growth. The overall Albury-Wodonga Twin City region combined is projected to well exceed 125,000 by 2036. The city is a key hub that sits on the national transport and logistics spine between Sydney and Melbourne and has seen past infrastructure spending specific to that economic driver. In recent years, the focus has been on border-specific infrastructure partnerships. For instance, the Albury-Wodonga Regional Deal, which is a tri-government initiative funding projects such as road upgrades, digital connectivity improvements, and even a potential new river crossing. Wodonga house prices are slightly cheaper than Albury just across the river. Its housing market has strongly performed in the past decade and is still relatively affordable with a median price of $622,000. That's up from $372,000 in January 2020, an impressive 67.4%. Prices peaked at $599,000 in December of 2022. The market then softened, dropping around 5.8% through to September 2023 before growth rebounded to climb to today's median. The vacancy rate is 1.9%. It hovered around 1.5% or below since 2020, but spiked to 2.3% in late 2024 with the onboarding of new housing stock before coming back down. In any case, rentals are still tight. Gross rental yields sit around 4.3%, and the data shows yield growth stabilised in the past quarter and rents rose just 1%. Stock on market has been very low throughout all of 2025, hovering between 1 month's worth of inventory and even as low as 0.8 of a month. Days on market has been relatively stable the last 2 years and edged down in June 25 to the second lowest level in the past 12 months. Building approvals have also dropped from 2024 levels. Wodonga's post-dip rebound has restored price momentum without erasing affordability. Values are back above their 2022 peak, yet still sit well below Melbourne's levels. With inventory stock at barely a month, approvals falling and vacancy sub 2%, supply remains tight, anchoring prices and rents. Yields are holding firm, so investors can expect capital growth driven by constrained stock rather than runaway rent rises in the near term. Well, there she blows, the 5 largest of the 10 major regional cities in Victoria. Now, to close out, I'll leave you with this, and it's important. So lean in. These 10 major regional cities refer to local government areas. They span large boundaries that are made up of many suburbs. Don't get caught out when we talk about, for example, the city of Ballarat, thinking that we are simply talking about its city centre suburb called Ballarat. We're talking about LGAs as a whole in this video. Now, we explain all of that in part 1 of this video series, and you might want to watch that if you haven't yet. Also, make sure to subscribe and keep an eye out for part 3, where we cover off the next 5 cities: Warrnambool, Mildura, Horsham, Wangaratta and Latrobe City. Now, this will be released in about 10 days after this video's release. And if you are thinking about buying in Victoria, just know you can pick up the phone and call Boyd and myself anytime for a free discovery call where we can run you through the intricacies spanning the whole state. We are buying in Victoria every week and we can run you through the details like no one else can. Until next time, happy property navigating.